And what is up, guys? Andrew here, and in today's video I will be bringing you all my top 3 stocks. So coming in at number 3 we have Walmart. So let's just start off by taking a look at the chart here. We can see that they have been performing not very well year to date, and after this peak at $110 we're now trading at 82. There is a very strong support and resistance right here around the 80 to 82 $2 mark area, so definitely watch for a bounce there. We can also see that there is a descending wedge formation right here, which has a bias to the upside. Their recent earnings report was very much in line with expectations, which is why we didn't really see much of a pop, and it wasn't enough to really send them out of this downward pattern. Heading over to the one-day chart though, we can see that we have printed a bullish divergence on the RSI, which is a medium-term bullish signal. So I would definitely expect this to pop out of the downward wedge. One thing to watch out for though is if we break through this resistance slash support right here at 80-ish, $81, I would fully expect us to go all the way down to around the high 70s, around $77, to retouch the bottom of this strong support line right here. We can see that we are in a upward channel, and if I just go to even longer term views here, whoops, this is a pretty strong pattern. We have been obeying this for quite a while now. Let's head over to analyze Walmart financially now. Price to earnings and forward price to earnings ratio look alright. Not the best, but pretty good. Price to sales is very cheap, but price to earnings growth is pretty expensive. So we shouldn't expect huge amounts of growth from Walmart. Earnings per share was down this year, but for the next year and for the next 5 years, it's looking okay. One thing that worries me though is this EPS quarterly year over year, which is down quite a bit. It's probably not a huge deal in the long term. Walmart does boast a 2.5% dividend though, which is nice, and Wall Street looks pretty alright upon Walmart. We can see that very recently, 2 weeks ago, there is an outperform from Telsey. There is a buy upgrade right here, and a hold and a neutral. So that's generally a good outlook. Now that Walmart has been beaten down quite a lot and we are looking to retest this very strong support, it looks like it could be a very good time to buy in. Alright, and for my number 2 stock, we have Sina Corp. They are a Chinese tech company, one of the biggest in China right now, and they own things like Weibo and also a lot of the telecommunications for China. We can see that recently, in the last couple months, they have taken a beating from the 124 level all the way down to around 90 now. We are sitting towards the bottom of this rising support line. We have seen this has been obeyed since almost the beginning of 2016. So another thing to look out for is that we have printed a bullish divergence, which is again a medium-term bullish signal. I think Sina could be a really great buy here towards the bottom of this trading range, and we can see that their financials look very healthy, sitting at only a market cap of 6.48 billion. Their PE ratio is pretty high right now, but their forward PE looks very nice. Earnings were down this year, but next year it's going to be up 47% projected, and for the next 5 years we have a 38% EPS growth, and this could be seen reflected in the sales quarterly year over year, 58%, and this is probably earnings per share is just due to a lot of recent investment towards future profits that I'm totally okay with. Gross margin, we can see it is at 73.9%, which is absolutely huge, and all their other numbers right here look very healthy too. Price to earnings growth is only 1.12, which means this stock is priced very nicely for the amount of growth that they'll have, and even price to cash is sitting well, so they have a decent amount of cash reserve right now as well. If you take a look at the chart here, we can see that on this day right here, which was earnings reported on May 9th, they had a Good earnings beat. The earnings report was very positive on almost every respect. However, we still sold off from about $95 to $90, about 6 to 7% further downside right there. That is now mitigated if you buy in right now. So, after what seemed to be a really nice earnings report and quarter for Sina, we sold off even more, probably just because we're trying to get to the bottom of this trading range. We are nearing it very closely right here. If you want to be safe, you can wait for another couple percentage points down before the buy-in. However, I will probably just be buying in anytime right here, and I am expecting to see this shoot back up. Alright, and the last stock that I'll be talking about today is Disney. So we can see that Disney has been round. So let's take a look at the chart. We can see that Disney has been range bound between this condensing triangle for almost 3 years now, and we can see that the lows are getting higher here, but then the highs are getting lower here. So this stock has been trading sideways for a very long time now. If you got in back in April, or if you're going to get in now, you could probably expect us to hit the top again sometime around 110 within the next few months. So you can play this as a swing trade like that if you would like. Other things to look out for: this is sitting at a decent support, although not the strongest here, at 102. Earnings report back in early May was positive. And if we just take a look at some of the numbers right here, we can see that the earnings per share was down this year. However, next year and for the next 5 years, it is projected to have a decent earnings growth, especially for such a mature company sitting at a $152 billion market cap. It is going to continue to become cheaper right now if the price sits the same. So a forward PE of 13 is sitting very cheap, and all the other numbers look very healthy right now, especially free cash flow. That is a decent amount of free cash flow. Disney does come with a 1.6% dividend right now, which is decent but not the best, especially for a stock that has been trading sideways for so long. We are counting on a breakout to the upside. However, we can see that the sales and the EPS being positive is good. Looking at some of the Wall Street sentiment, a lot of these companies and analysts are pretty divisive. We see one sell, 2 buys, a hold, and a neutral, which is an overall, I would say that's a neutral stance on Disney, which makes sense. I want to take a look at this chart and this very nice summary here that Friendman on Reddit compiled. We can see that it has a very nice, clear outlook at some of the financials and of Disney. Revenue, EPS, these are all looking very positive. We can see some of the strengths and weaknesses of Disney as well. Overall, it looks very strong. One thing to know is that Disney is probably going to be competing against Netflix as well, and Netflix's recent success is probably one of the reasons why Disney has been trading sideways for so long. People are scared that they won't be able to compete in the entertainment slash media, digital media streaming industry. However, I think these fears are a little overstated. Disney owns so much popular content nowadays, and we can see that all the recent movies that they have come out for have been a huge success. On top of that, Disney is super diversified. They also make money from their parks and from advertising and merchandise as well, and from all their resorts that they own. One thing that is dragging Disney down and has been dragging them down for quite a while, though, is ESPN. I am pretty confident that they'll be able to spin it into something better. And sports, though, is still doing decent enough for Disney. So that's going to do it for me, and that's going to be my top 3 stocks for the month of June. I hope you all enjoyed and took something from this video. If you liked it, please be sure to give this video a thumbs up and leave a comment if you have any questions. And also be sure to subscribe if you haven't already for more videos just like this one. Thank you all so much for watching, and I'll see you in the next video.